Hey everybody, Eric Sandstrom here from Prime Lending. You've got the Guideline Guru. What we're going to be talking about today is a specific topic that a lot of people have encountered recently because of experiencing trying to buy a house after doing a bankruptcy. So we're going to talk about a few things here today. We're going to start with why did the attorney that you worked with include the home in bankruptcy, let's say if you were going to continue to pay. So you have the ability to refinance even though you have included in the bankruptcy. We're going to be talking about that. Another thing we're going to be talking about are what loan programs are out there and which ones will benefit you the most depending upon how long it's been since the bankruptcy has been filed. The other thing that we're going to be going over here is what if the property foreclosed? So what if you included a home in bankruptcy and that subsequent property foreclosed? What happens then? Are the seasoning periods based off of foreclosure? Are they off of bankruptcy? We'll chat about that here in a second. And then can you refinance if you included a home in bankruptcy? So quite a few things we're going to be chatting about. We're going to try to make this as quick as possible just so that you can understand what your options are. So let's start off with talking about why did the attorney put the home into bankruptcy? So in many cases, when you file BK and you've got a house, the judge actually forces the attorney to include the home. The reason for that is it protects you in the long run. So if something were to happen with your job, loss of income, let's say you had an investment property, renters destroyed it, they include those properties in bankruptcies ultimately to protect you. It does not prevent your ability to refinance in the future. Your name still is on title. It's just that you're not obligated towards the liens that are associated to it, or I shouldn't say obligated, but basically these liens no longer report on your credit, so you're protected in case of something happens as far as the big picture of things. So your credit's mainly protected. So that's mainly why the attorneys included homes in bankruptcy. Very rarely will we see a property be reaffirmed. So that's actually not a good thing. If you got your property reaffirmed, it's not the best. Okay. So let's talk about what home loan programs are out there. So let's say you included a property in bankruptcy that subsequently foreclosed. So usually conventional time periods are going to take about 7 years for you to be eligible for a traditional loan program if you have a foreclosure on your credit. Now, here's the caveat. If you put your home in bankruptcy and then that home subsequently foreclosed 3 years later, what do you're not going to be talking about a 7 year period from the point of the property foreclosing because the bank took forever to do so. You're actually going to be looking at bankruptcy seasoning periods, which are 4 years for conventional after the point the bankruptcy has been discharged. So you're not subject to foreclosure timeframes in this case. Okay. FHA Big Myth is a lot of lenders will try to push you into FHA, try to qualify you off of their shorter time periods for foreclosure, which are 3 years. And that's actually where I get a lot of people calling me saying, hey, Eric, I just got denied by my lender. Can you help? Yeah, I can help, but here's what we're going to do. So that, and then also we have portfolio programs. So if you've got a home that's a day out of foreclosure, your bankruptcy is not seasoned long enough, we have programs for that that start at a really low down payment. So just make sure to give me a call if you have any questions, figure out which program's best. Now, let's talk about what if the property, well, we already talked about what if the property foreclosed. So again, you're based off of bankruptcy seasoning, not foreclosure. So now let's talk about if you included the home in bankruptcy, but did not foreclose. You continue to pay on the mortgage. And now at this point, you've been denied a refinance by your current lender saying they can't help you because you included your home in bankruptcy. Okay, let's chat about that for a second. That does not mean you're not eligible for a refinance. As long as you've been continuing to pay, you've obviously validated that you want to keep that debt. So what's going to happen is that loan will no longer be in bankruptcy protection because you're going to be refinancing out of the bankruptcy protection, which is a good thing because that will now start reporting on your credit. So there's going to be a few different benefits when you look at that perspective. But if you're going to benefit from a refinance, lower rate, cash out, whatever it may be, you can absolutely do that as long as you meet the bankruptcy seasoning periods, or if you're going for a portfolio product. So that's it for today in regards to home included in bankruptcy. If you have any questions, please feel free to reach out to me, email, call, whatever it may be. Thanks again, Eric Sandstrom, Prime Lending Guideline Guru. Talk to you next time.